Palisade Global Investments is pleased to present the Hard Asset Conference on Jekyll Island, with keynote addresses by Eric Sprott and Dr. Edward Griffin, author of The Creature from Jekyll Island. The event will be sponsored by Triumph Gold Corp, currently drilling its 100% owned Free Gold Mountain project in the Yukon, and by Mexican Gold Corp, just weeks away from publishing its maiden resource on its Las Minas Gold project in Veracruz State, Mexico. Come join us at the Jekyll Island Club from October 19th till the 22nd. The event is limited to just 50 participants. Visit palisadeconference.com for more information. Welcome back to another episode of Palisade Radio. This is your host, Collin Cattell. On the line with us today is a new guest to the program. You'll know him. His name is Byron King, and he is the author and an editor of the Rickards Gold Speculator, which is a publication of Agora Financial. Byron, welcome to the program. Thanks for coming on.
It's a pleasure to be with you. Thank you.
We really just had such an enlightening conversation that lasted about 30 minutes before we hit record here. We were talking about the events of this week and actually all of the events that have happened in the media and in the U.S. following Trump's election and how that might play out into the stock market and the dollar market and the gold market. And I thought, starting off from top-down approach and leading into gold might be an interesting way to have this conversation today. How about we start with, we were talking about Agora is based in Baltimore, and overnight, last night or the night before, they took a couple of those Confederate statues down, and it was an interesting analysis you gave of what you thought was actually behind all of this.
Well, they took the statues down in the middle of the night, and I suppose that was a prudent thing to do. If the statues are going to come down, you may as well do it quickly. It's like rip the Band-Aid off the cut so that it hurts less. Get it over with. In a museum sort of sense, I hope they put them in a museum or a warehouse or something. I hope they don't just melt them down and totally destroy them, because these are of historical significance to some extent, whatever. But I really do think, and what we were talking about before, that this whole Confederate statue thing, it's not about Confederate statues, okay? It's not about the Civil War. You may remember the Civil War ended 152 years ago, so it's been a while, and in fact, we had many years under President Obama. They could have taken the statues down. Why is it that 7 months into the Trump presidency, Civil War statues have become a thing? I'll tell you why they've become a thing. It's because it's just one more wedge with which people who are trying to control the narrative it can get under people's skin and can grab the media and grab the airwaves and and kind of control how people think. I just, this whole thing reminds me of kind of how professional wrestling is fake. It's not fake in the sense that the people in professional wrestling really are big, strong people, and they really do those double backflips, and they really they really are highly coordinated and talented athletes. But in the sense that it's all staged and scripted, that professional wrestling is fake. Just like this whole thing with the Confederate statues, this is something that has come along, a pet rock, a shiny thing that somehow or another the media wants to focus on and use it to drive a particular narrative that rips the country apart. And to that extent, having said all that, we're not trying to run a political newsletter. I write a newsletter about gold and silver, and to the extent that it looks like the United States has a problem in terms of self-governance, the price of gold goes up. The dollar weakens, gold strengthens. The mining industry becomes a more valuable idea in terms of people investing in it, and so that's how I look at the news. I don't read the news to read the news. I read the news to figure out what we should do with our gold and silver ideas, and what we should be aiming for in the newsletter.
Byron, I've read at least the last three of Jim's books, which there might have only been three. There might have been a fourth one. He has a very unique and interesting perspective on where the economy is at in the United States. And of course, that dovetails into the idea of investing into gold and silver and the related mining equities. Where's Jim's head at right now, and where's your head at right now in terms of the economy? It's continued the stock market to march up. Up until recently, the dollar's been very strong. That started to come off. But yeah, tell us where your head's at.
Well, again, to get a little bit political, only to explain, the economic angle and the gold angle. Almost nobody expected Trump to win the election last November. Although Jim Rickards did, he actually went on record. We have a video of him recorded, before the votes, before Election Day, saying that there's a very strong possibility that Trump could win, and if that happens, here's what to do. But nobody expected Trump to win. He won, and on the night that Trump won, on the election night, gold started to go up, and then Stanley Druckenmiller, a big shot, investor who owned a lot of gold, said, the reasons that I had for owning gold have all gone away, meaning Hillary didn't win, Trump did. So he sold his gold. The price of gold stopped going up quickly, and it dropped precipitously, for the next couple of weeks at the end of November and early December of 2016, if you recall. I mean, just look at the chart, and so gold has been sort of making a very, very slow, painful climb back up for the last 6-7 months. The good news is that we keep having higher lows, but the highs keep getting capped, because there are these people out there who manipulate the heck out of gold. I mean, central banks, big funds, they cannot afford to see gold get too expensive too fast, and so they put a cap on it. But the bottom in gold seems to be getting higher. In terms of where's Jim at? Where am I? I am a great believer. Jim is a great believer in the virtue of owning, hard assets like real gold, real silver. Owning shares in mining companies that are real companies, and that will reflect well in an environment of rising gold silver prices. I mean, we Jim and I think are on the same page in terms of in the near term, the price of gold goes up, price of gold, silver, up, down, up, down. Every day is different. It gets whipsawed by the news, what have you. But in the medium term, and certainly in the long term, we are looking at a long-term decline in the value of the dollar, and thus, in an inverse sense, we're looking at a long-term increase in the in the value and in the pricing of precious metals, gold and silver. There are just so many things backing that up. I mean, we could get into them, from just basic supply-demand issues in the actual mining industry, the milling, the processing industry. We can get into the demand issue of who's buying it. Russia, China, Middle East, India, investors. We can get into the idea that so many Western investors, certainly North American type investors, have this disdain for gold. But I mean, if just a fraction of investors, if 1 or 2% of the investment community out there decided to move 1 or 2% of its money into gold and silver, I mean, that would just be an absolute tidal wave of demand for the metals, and we would see those prices skyrocket. And then on the other side, the macro side, I mean, if you show me a government anywhere in the world that's not overspending its means, that isn't ruining its currency, at least a Western government. I mean, say what you will about Russia. I mean, the Russians are actually a pretty well run economy. If you want to get into that level of granularity about it, but so we see a very strong environment for gold, silver, and by extension for mining companies. And then in terms of the newsletter that I write with Jim, we focus on the junior end of the mining side. The smaller companies, I would say in the range of market cap $100 million up to $500 million type companies, maybe a little bit smaller every now and then, maybe a little bit bigger, depending on the company. But I mean, that's what we're looking at. We're looking at companies that have a protected downside and a wide open upside in an environment of rising precious metal prices.
You pointed out the fact that just a little bit of money from the U.S. coming into gold and silver would move the price, which makes a lot of sense. What kind of catalysts are you looking for that could make that happen in the near to midterm?
Well, it's a lot of it's risk management by people that control big money. I mean, when you look at where is all the big money in the stock market right now? I mean, they talk about the Standard & Poor's 500. It's really the Standard & Poor's 5, and then there's the Standard & Poor's 495, because much of the S&P growth has been in 5 companies, Apple, Google, Facebook, those guys, those high tech go kind of companies. If there was some reason to lose confidence in those names, you would see a lot of money start to flow out of that, and a lot of that money would be looking for a home. And the question is, what is it going to buy? A very, very, very underappreciated, underloved sector is now and remains the precious metal sector. Gold, silver, and we can throw platinum, palladium in there, and then a whole nother angle on this is kind of the valuable base metals. The most traded couple of metals in the world are iron, meaning steel, and aluminum. Just because that's the basis of industry. It's what you build buildings out of, and cars and ships and stuff like that. Iron and aluminum. But in terms of what powers a lot of things, and what are the alloys that make things work? It would be copper and zinc. Throw in some lead, throw in some few other odds and ends, cobalt and various things. I mean, when you look at, say, the automobile industry, which is a huge consumer of primary materials, iron, aluminum, copper, zinc. I mean, when you look at the auto industry, what are a couple of the big trends that we see? Well, obviously one big trend is this switch over from internal combustion engines to battery-powered cars. Right now, most of the vehicles in the world are internal combustion engines. A very, very, very small fraction of the vehicles being made are, electric or hybrid electric, some form of battery in the car. But more and more and more are coming down the road. I mean, you've got, somebody like Tesla saying we're going to build 500,000 cars a year. Well, okay, that's not a lot in the grand scheme of things, but it is a lot, considering that it's moving from a very, very low base. You look at other places in the world, Volvo, the car company, announced that by, the year 2019, which is 2 years from now, everything they produce is going to have a battery in it, in the sense that it'll be an EV or a hybrid EV, aside from just the normal, battery that you use to start your car. I mean, these are going to be much more battery. You get a country like the United Kingdom saying they're going to phase out the internal combustion engine entirely, and it's going to have to be, electric cars. So what does that mean? Well, that means batteries. Well, okay, that means that instead of 25 pounds of copper per car like you have today, you're going to have 175 pounds of copper per car within a very few years for these electric cars. That's 150 pounds per car more times millions of cars. And that's on top of all the other copper demand that there already is, just in terms of using copper for everything else that we use it for. And then in the batteries, cobalt is a part of that. Where do you get cobalt? You get cobalt from mining copper, among other things. So you get into this exotic, some of these more exotic metals. There's definitely money to be made there. You look at India and you look at China. A very small fraction of the automobiles produced in India and China have the rust protection that we're used to in the West, in North American cars, European cars. And what is it that is the rust protection of a car? It's zinc. It's galvanized steel. Most of the cars in China, most of the cars in India are not galvanized steel. So all of a sudden, you look at the zinc industry. Zinc is booming. We've got the highest prices for zinc we've had in years, just in the last few days. So in terms of where are the mines and the metals going? If just a little bit of the money that is going into the Teslas of the world, or the Apples of the world, or the Amazons of the world, or the Facebooks of the, if a little bit of that money gets spooked out of the go-go, momentum play, stock market game, and starts looking for a home, it's going to go to gold and silver, it's going to go to copper, lead, zinc, and if just a little bit of that money goes into those mining industries, a lot of the companies that produce that stuff are going to do very, very well as stock investments.
Well, Byron, despite the fact that the dollar has consistently depreciated for the past 100 years, gold and certainly gold stocks have always moved within these cycles. And January of 2016 began an epic rally in the gold stocks, which lasted for a few months. And since then, as you know, we've been trading sideways to downward in a lot of these gold stocks. Are you convinced that we are in the beginning stages of this next bull market? It would be hard to say that we're not, but just want to get your opinion there.
Oh, I think we're definitely still in the early innings. I mean, if you're out there listening and you look back and you say, "Oh, nuts!" I kind of missed that big run up back in 2016. I missed the train. Not even going to try to run down the track and hop on a car here. My answer to that is no. Okay, so you missed the first inning, or you missed the top of the first inning, but don't fret, because there's still plenty of wide open upside for gold and silver. 2016, the first half of the year, January through about July, up till about August of last year, it was fabulous. Oh my goodness! I mean, you could just throw a dart at the board and everything was going up, and it was great. And that's because we had that 3 to 4 year bear market in gold and silver and the mining stocks. Things were just in horrible situation. And when the breakout finally came in about January or so of 2016, I mean, there was this euphoria in the markets, and so you had these 4 and 5 and 8 and 10 bagger gains for some companies from very, very low levels, and then in the second half of 2016, Federal Reserve sort of waging jihad against gold. We're going to raise those interest rates, and then we had the American politics of the 2016. The Trump-Clinton election race at the end of last year. Now this year in 2017, we're talking now in about the middle of August, and so the first 7-8 months of the year. I mean things have been trading in a bit of a range. I mean, gold prices have been rising to some extent, not as much as we'd like to see, but like I said earlier, we have higher lows, so to speak. Every low seems to be higher than the last low. That's a good thing. And then we see the mining shares themselves. If you look at the indexes, GDX type index, or the SGDM, the Sprott Gold Miners Index, guys that I like to follow. We see them trading in a very narrowing sort of range. Actually, in one of my articles last couple of days, I actually graphed it. I put it. We're trading in sort of a closing cone. We're trading down to a point. Well, in terms of trading patterns, you don't just you don't just do that and stay there. You get to a certain point, and then you're going to have a breakout one way or the other. You're going to break out to the downside or break out to the upside. I think the downside is very much protected here. I think that in terms of global politics, global geopolitics, the nervousness of the world over any number of big macro geopolitical issues, in North Korea, Ukraine, the Middle East, international currency crises. I mean, I think the downside is really protected in terms of precious metals dropping by any precipitous amount. The upside is just plain wide open, and then closer to home, closer to here in the U.S. I mean, the political risk in the U.S. I think is rising almost day by day. I mean, we started out earlier talking about Confederate statues and everything. Confederate statues, as I said, they're not. It's not about Confederate statues. This is about This is about a massive political battle in the United States that's being fought, between, what people call the deep state, but and then people who are trying to sort of free up from big government, from big control. And are we going to get tax reform or not? Well, if President Trump is completely hamstrung now because of this whole Confederate statue thing and the Charlottesville, Virginia incident, if his political capital has been burnt up and we're not going to get to tax cuts, well, then everything that was supporting the rising stock market is now starting to crumble. We thought we'd see Obamacare reform. Nope. Still, right now, aside from maybe a few administrative rules out of the Human Services Department, this is the same Obamacare law that Obama signed 7 or 8 years ago, whenever it was. We thought we were going to get infrastructure. If Congress isn't going to cooperate with Trump on infrastructure, then I guess we're not going to get infrastructure. We thought we're going to get the big defense build up, and maybe we will, maybe we won't. I don't know. The money's definitely not there to do it. So the question is, where's the money going to come from? Well, good question. I don't know. And if somebody doesn't work a deal in Washington, then nobody knows, and the money won't be there. So there's lots of things that we're supporting this great stock market run up, and that we're supporting this the euphoria that was giving people an alternative to gold and silver, and those things are starting to go away. And if those things start to go away, what does that mean? The risk profile is now moving up on the American economy, and when the risk profile moves up, the value of the dollar drops, and the value of the dollar drops, it means the price of gold and silver should be moving up. So that's sort of the logic, you might say.
Well, if there's no ceiling for gold, then gold stock's obviously a great leverage play, and that's what your newsletter really focuses on. Are you able to give us a top pick, maybe just to explain why you like it and what you're looking for in a stock? And if you're not, maybe just go over what kind of key credentials you're looking for in picking one of these companies.
Well, I look at the gold industry itself You've got your major producers, your big mining companies, your Barricks and Newmonts and Goldcorp type companies, the great big guys, and then you got guys like Freeport McMoran, the copper company that produces a lot of gold, the kind of thing, or look at Glencore. You think of Glencore as a copper zinc producer. Glencore is the world's second largest producer of silver. They produce a lot of gold too. So you got your big mining guys, and the big mining guys are big miners, but really what they are, they're big banks that engage in mining. They spend a lot of time. They spend much of their time worrying about money, worrying about Wall Street, worrying about their share price, their dividend structure, things like that. They don't have exploration departments, so to speak. They don't even have development departments. If they need a new mine, they go out and they buy it. They buy one. They buy something from an intermediate company or a small company. Then you've got your smaller companies, the Agnico Eagles of the world, the Alamos Golds of the world, those kind of guys. They're not great big Barrick Golds or anything else, but they're not tiny little juniors either. They too are working on developments. We'll keep an eye on them. But the ones that we follow in the newsletter, Jim Rickards and I in our newsletter, the Rickards Gold Speculator, are the junior guys. And I've broken those into three categories because each one is a different kind of an animal. You've got explorers, and it takes something to be an explorer. That is a whole management approach. It's a whole capital money raising approach, money spending approach. You've got no sales. You're not mining anything. You're not producing anything. You are drilling holes in the ground. Well, you're doing geology and you're doing a lot of thinking, and then you're drilling the holes in the ground. You drill the holes to prove up your ideas. You don't drill your holes to. If somebody says that they're exploring by drilling, go away from that. goodbye. I don't want to explore by drilling. I want to explore by thinking, and then I want to drill to prove the thinking. I want to prove that your ideas are good after you've thought about them very hard. Then you've got the developers. This is like after you found the ore deposit. Now we're going to work on doing the kind of development to turn this, hillside or this windswept prairie or what have you. We're going to turn that into a mine, but that takes lots of permitting. We have to do all the environmental work. We have to worry about water. We have to worry about power. We have to worry about road access. We have to worry about relations with the local people who live around there. If it's in Canada, the First Nations, or if it's in South America, the various, villages and tribes and whoever that you've got to deal with. You got to get your social license, and, you got to deal with the government. You got to get the tax structure, get that mining law, tweaked just the way you need it so that you can do what you want to do. That's a whole nother skill set there. The geology team that's really good at exploring and finding the ore deposit may or may not be the same people who are good at getting all the permits and dealing with all the social license type issues. And then you've got your junior producers, the ones that are just they're starting up a mine, for example. One company that I'll mention that has been a success in our newsletter is Pretium, Pretium, or PVG on the New York Stock Exchange. They just within the last few weeks really declared commercial production on a mining project in British Columbia that they've spent several years. They were an explorer, they were drilling, they were thinking, they were drilling, and they at one point they were drilling through almost solid gold. They were pulling these cores out of the ground, and these cores were they're big 2-inch cores with just gold, and like not just grams per ton. We're talking pounds of gold in these cores. Look at these cores and you see these things. They look like they're cast metal practically because they were just drilling into the sweetest of sweet spots in this one area in British Columbia. So they found the ore deposit. Then they had to build the mine. They had to develop the mine, and the mine is way, way, way up in the mountains. It's above the tree line. It's glaciers nearby, and just all sorts of water issues and environmental issues and this and that. They had to string a power line to get there. They had to build roads to get there. All the development work. Now, finally, years later, they're finally mining the ore. They're finally processing the ore at their plant, and they're pouring bricks of gold, and they're selling it. And, so that's been good. So what I'm looking for, I'm looking for really good people who know what they're doing. I want really good geologists and really good engineers and really good executives and people that have a sense of how to do this job. I'd like to see people who have done it before once or twice. I don't want anybody who this is their first rodeo. I want somebody who's been in this business for several years. If the guy can tell me about his last 2 or 3 or 4 successes, that's even better. I like the number 2 or 3 or 4, and I love the word success. Companies that have, people that have started companies and built them and sold them and, been bought out, whatever, that's a good thing. And so I want to see that. I want to see a good asset. I'm a geologist by background and training. I love to get out in the field. I jump on an airplane, fly someplace, get in a helicopter, fly someplace else, get in a pickup truck, drive someplace else, get out with, in my steel-toed boots, or actually I have carbon fiber toes because they're much better than steel, lighter weight and everything. And, I'm out there swinging a hammer, smacking those rocks. I go to the core shack looking at the cores. I want to see the chemistry assays. I'm out there looking at this stuff, and when I find a good company, I write about it. I'm looking for companies that, like I said earlier, are protected on the downside but have a strong upside. Because the macro thesis of the newsletter, like I said earlier, Jim Rickards and I, the price of gold, the price of silver is headed up over the medium to long term. The value of the dollar is going down, metal's going up. So the companies that mine this metal are leveraged bets on the rising price of gold and silver, and that's what we're looking for. We're looking for great companies with great assets, great people who can function in the jurisdiction where they're working and who can function in this crazy world in which we live.
Well, we're just about out of time, Byron. I thank you for coming on the program once again. For all of our listeners, is Byron King. He writes the Rickards Gold Speculator with Jim Rickards, of course. Byron, hopefully we'll have you back on the program soon.
Oh, I'd like to get back and we can catch up on other things at other times. Thank you.
Think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?